Are stocks about to crash right now? Because the last time this happened, or the yellow box, stocks basically dropped by 10%. Exposure is very high. And the last time this happened, we went down. This is important because we're also overdue for a correction. We've been talking about this. So it looks like, at least for this year, the trick or treat is a trick, right? Stocks are down and they're crashing. There's a lot of key dates we're going to get through, including closing out the month and looking at Apple and Amazon, because as of right now, this does not look pretty. We've stopped going up. We're bouncing off our 50-day uptrend. And if we look to the weekly chart, we lost our area. This is why I want to talk about the correction today, because there is an increasingly higher chance we could go down. Remember, we talked about how we have one lower low and one lower high and one full candle. Well, let's be a little bit objective here, because if now we look, we got two full candles with two lower highs and two lower lows. That's not good. The chart is breaking. It is not yet broken. Looking here on the monthly chart, well, we're closing at or near the low of the candle. It's not great. And we're now back below resistance. That's going to be the key relative high right here with the arrow, which means that the bears don't technically have an ingredient for the recipe yet, but because we're closing at or near the low of the candle, the odds increase that we could form that lower low. It's the same thing we talked about here on the weekly, where it said, hey, we formed a lower low, but we did recapture for a failed breakdown, but it's still not a good sign. It's still technically a lower low and a lower high. So into next month, and remember, what happens into the beginning of November? Anyone out there remember what happens on November 5th into the early part of November? Oh my God, that's like a really big date. Yes, it is. It might be good or it might be bad. So do we get our trick out of the way right now and then we get our treat later? Make sure you let me know by leaving me a comment. All right, let's go. So we're back into fear too, right? There we go. Oh my God, market's back into fear. Is it time to buy? Well, it's time to start considering to buy, because fear is for buying. Let's go. Looking here to after hours, Apple is flat. It was a little bit down earlier. It was up, down, all around. There's mixed guidance, specifically as it relates to their China numbers. Amazon up pretty strong, Abbott up, and even stinky Intel is up. Oh my God, Boeing up 2, Intel up 7. Oh my goodness. Yeah, let's look at the blood though. Looking at today, ouch. Oh my God, yeah, sponsored by the color red, right? It's a trick. But look, in the last 4 hours, things actually stabilized. They didn't get all that bad. So what really happened is that into the morning, or the gap down this morning, the gap down sell, it started stabilizing into the afternoon. And now in after hours, we're actually mixed, but a little bit up. We'll see what happens here. What's important for me as well is the net effect of Apple and Amazon, as we talked about. So right now we're up by 86 cents. We dropped by $11. We're up by 86 cents. Not good. That's the takeaway. Why? Apple's so big. Apple is so beautiful, so magnificent that it really matters. It's the biggest block. So Amazon up 5 is nice, but Apple down by 1.4 definitely hurts, right? It's offsetting a lot of the gains from Amazon here. All right, so Amazon shares pop on earnings beat cloud growth. There you go, Mr. Andy Jassy. Let's go. Apple says, let's just check here. Apple says Apple sales rise 6%. Company seeing early iPhone 16 demand. All right. So with earnings so far, a lot of stinkers, right? AMD stinker, Eli Lilly stinker, Microsoft stinker, Meta stinker, Uber stink. So far, Apple's a stink. And what's so interesting is that the only one that really did well was Alphabet. And I'll read this headline here, right? ChatGPT is launching ChatGPT search. And they're already partnering with a lot of big companies, including the Financial Times, the Times, Associated Press. They're coming after Google. So the only one, right? The only one out of the group, Tesla's the one that beat. Oh my God, Tesla and now Alphabet. And Alphabet might be in trouble here. So part of what I'll be watching for, we'll come back to SPY in a minute here, but looking at Google first, what'll be interesting is that we're now inside this area where from earnings to earnings to earnings, from gap to where we are now, the gap's nearly filled. So on the gap fill, are now people as excited as they were only 24 hours ago? Or they're like, oh my God, can't wait to buy Google. And they're like, oh my God, can't wait to sell it. Well, when that gap fills, are we going to bounce? Are we going to fall to the lower end of the range or back down to support? Or are we going to rocket higher, go back for the all-time high test? That'll be really important for sentiment. Remember, Microsoft, or MicroStink, is the company that is backing OpenAI. And they're tying in a lot of MSN. Again, you ever use Bing, MSN search? Nope, not me. Not recently, right? It's not 1990 or 2000, but that's what Microsoft is trying to do. Same pattern here, right? Consolidation. There's their shoulder. We have the head and shoulders here. So I've said I don't love this chart. maybe the fundamentals will improve, but for me, that's a head and shoulders. It's visible on the daily, it's visible on the weekly, it's visible on the monthly. I'm going to ask you for a huge favor before we go further. Could you please consider smashing the thumbs up and subscribing to the channel if you're new here? Thank you very much ahead of time. So if we look here to Microsoft, like MicroStink, as I mentioned, bearish engulfing weekly candle. That is not good. That is no bueno. Bearish engulfing candle, we're below the 50 MA. And what we're going to need to do, like, it's nice they're rallying it up by, oh my God, $3. Yeah, well, it was down 26 yesterday, so better get plunging, boys. Right? The plunge protection team better get plunging. But we have to make it back above last week's low. And that's by tomorrow, right? It's spooky. Well, what's the 80 feet? Sorry, what's the payroll number going to be? What's the reaction going to be in Asia? Man, I don't know. All I know is I said the stage was set for a big move. And right now, the big move is to the downside. I kind of hate to say it, but kind of told you so too. Remember, I'm not trying to rub it in. What I'm trying to show you is that from my experience, if you've made a mistake and you're watching this video and thinking, you like my content, you think I'm good, I've been exactly where you are. I've made every mistake possible, and then I did it a second time just to make sure. So if you're like, oh my God, I don't feel like I did anything right, I'm just making mistakes, I've been there. And then I was worse than you off. I blew my account up twice. I've talked about that. There's no shame in it. Why? Because there's no such thing as a perfect trader, as someone said in the chat recently. And but there are liars. So it's not like you're going to have a perfect way to trade. I'm trying to teach you from experience what works for me, not what has to work for you. But when I said, remember, you don't want to be a wuss, right? We don't sell on support. So if we get a correction or stocks go on sale, you don't run out of the story. Say, yes, I'm buying with both fists. If the dip is good, you can do a knife catch. That is called bidding direct. You can bid directly on the area, or you can wait for it to come back down and then stage a reversal or a curl. By the way, that's what our system looks for, the algo.com. And right now, the S&P is due for a one-day alert, and I will do this as a favor to you. I will update you if we get that alert, because right now, power slam back down to the 50 DMA. What I would expect is at least a dead cat bounce. Is that dead cat bounce going to lead to a gap fill, or do we get rejected on the first key relative low? That's the weekly low. We look back to here. Last week's low is 574. So if we can rally 5 points to make it back up to 575 by the weekly close, hey, these charts start to get fixed. However, what I started to notice here and what I did not like into the close was this. I just don't like how we tapped this area multiple times. I'm like, well, where are the dip buyers at 570, right? We already broke the weekly chart. Where are they? Like, boop, right? Try to tap it once, tap it twice, and the volume is elevated, right? Starts elevating here into the close notably. So as we saw that elevated volume and we're tapping that 570 zone again, there's just a risk it could blow out, which is exactly what happens, right? They sold it off pretty hard here. So going into tomorrow, I want to see what happens. Is there going to be follow through? Are we going to break down, or are we going to save the chart? So that's it for today's video. You can now watch the video on the left to come hang out with me at 9:15. If not, thanks so much for watching, and I'll see you tomorrow.